All right. Welcome everyone. Welcome to this session. बहुत ही interesting session है. It's New Year's. बिल्कुल नई शुरुआत है and everybody has this question on their mind. What will 2025 look like? Which is why we are here. I have with me Mr. Pankaj Pandey, our head of research, and we'll get directly to the meat of the matter, sir. क्या लगता है 2025 कैसा होगा?
Wish you a happy new year, and I wish all the viewers a very happy and prosperous new year. Now, coming to markets, see, 2024 was a roller coaster kind of a year for the markets, but a good part is that all the asset classes did well. So when you look at gold, delivered a return of 19 odd percent. Then you had debt, which delivered about 10 odd percent. Real estate did about 15 to 20 odd percent. And within equities, large caps were in the high single digits or probably 10%. It is the mid caps and small caps which it did continues to sort of do very well with overall broad gain of about 25 odd percent. See the challenge for 2024 was that we had geopolitical tensions. Then on top of it, most of the major economies had elections. I mean, including India, US, UK, Japan, all of them. And in India, the challenge was that besides the Lok Sabha election, you had multiple state elections, and that sort of led to a push down in the overall capex spending because government has been a big capex spender. And on top of it, we had a very extended monsoon, so that had led to a decline in the overall or lower growth in the earnings. See, the setup for the year was about 12% kind of earning growth because we were sitting on an already high base of 20% a year before. Now, when all of this happened, the overall sense is that this year probably you are going to get a lower growth rate of say 7 to 8 odd percent in terms of earnings, and which is what the Nifty returns are largely in this market. And in fact, there is a good correlation also if you look at. So there was a period in time, say between say 2018 to say 21, when the earnings were 500, Nifty earnings were 500. From there on, next 3 4 years, the earnings actually doubled, and that is when the markets have also doubled. So markets are clearly sort of toying or trending in line with the overall earning trajectory. Our sense is that 2025 is going to be a very normal year, largely because, see, look at you don't have these kind of geopolitical tensions, and hopefully with Trump coming in, you'll have lesser number of these issues. On top of it, you'll have only two state elections. So you'll have Delhi at the beginning of the year, and then you'll have Bihar, which will be at the latter part of the year. So it is going to be a pretty normal year, and which is why we expect that the earnings also will normalize to about 15, 16 odd percent. So which is why we see that, or we expect that Nifty is going to cross 28,000 kind of a levels because next 2 years you'll have earning CAGR of about 15 odd percent. And that is going to sort of take the markets to 28,000 plus kind of a levels. Our target for Nifty is 28,300. And we feel that this is a good time to buy, given the fact that last 3 months have been pretty brutal for the market. So market at one point of time was sitting in gains of excess of 20%. It lost half of the gains because of all these geopolitical issues. So we would expect a pretty normal growth in the markets in line with the projected earnings, so which comes out to 28,300.
Absolutely. And getting a little sector specific, which sectors do you think will lead in 2025? Which will outshine?
So the themes which we are picking for 2025 is one is the capital expenditure and infrastructure, and I would highlight. Like I said, 2024 calendar year was marked by elections, both state and central elections, and that led to sort of a capex slowdown, and which is where we would expect things to sort of normalize. And I think on top of it, we are also sort of expecting a beginning of the rate cut cycle domestically. And mind you, all these infrastructure segments are quite sensitive to interest rates. So, which is why I feel that capex and infrastructure development is going to be one of the biggest themes going forward as well. The other is the premiumization. To understand this, what we have seen in the last 4 5 years is that the household equity value used to be about 58 lakh crore, say 2021, and which has jumped to about 138 lakh crores. So roughly a jump of 80 lakh crores incremental. So that is the kind of gains Indian households are sitting on. Now, obviously, you are already seeing some benefits of that in terms of real estate doing very well, or hotels or hospitality in general doing very well. Autos, select pocket doing very well. So, which is where we feel that this premiumization, because of the wealth effect rub-off, is going to sort of continue. The other is the financialization. So understand this, markets have done well, and we have clearly seen this kind of a trend in US. Now in US, what we have seen is that US had a 20-year bull market because the household savings which were invested in markets were 10% and which increased to about 38 odd percent over this period of time. And in India also, we are clearly seeing that this household saving used to be 9%, has moved to about 29%. And our sense is that with the inflows remaining intact, which is what we have seen this year. So from that perspective, I think financialization or equitization of savings is something as a big trend which we see. And obviously, it will have a benefit across all caps. And that is another trend which we are picking. Not to say that we are going to see a 20-year bull run, but the setup looks quite attractive. And then we are picking up one interesting opportunity in terms of global CRDMO or CDMO as an opportunity which will unfold even without the Biosecure Act not getting passing through. So from that perspective, these are the trends which we have identified. And we feel that, and our largely recommendations are from these themes only.
Great to hear that, sir. Let's talk about what everybody is looking out for. Which are our top stock picks for 2025?
So when you look at from a stocks perspective, clearly what we are looking at is the infrastructure and the capital expenditure as a theme to sort of pick up. Now, the biggest player there is obviously L&T. So L&T is our top pick with a target price of 4,262. Now, this is one company which has got an order book of in excess of 5 lakh crores. The order pipeline is also fairly healthy at about 8 lakh crores. And we would expect that it will sort of, once this executes the orders, then you'll see a 15% kind of a top line and bottom line growth. And good part is that this company is also turning more capital efficient. So ROEs have already reached about 16 odd percent, expected to reach 18 odd percent. And there could be a number of triggers in terms of break even of the Hyderabad metro, or the margins in the project and management business could go up, or there is a good possibility that the company might do higher payouts of dividends. So that is one. The other is the techno electric and engineering. Now, this is a power infrastructure company into various segments like say power generation, transmission, distribution. They are into smart meters and they are into data centers as well. So last year, they had a pretty good order inflow of about 7,000 odd crores. And so this first half, the orders were slightly lower in line with the overall. So they got orders of about 1,000 crores, while they have guided for 2,500 odd crores. A good part is that the kind of segments which they are into, which is smart metering and transmission and distribution, there we would expect annual order inflows of 1,000 to 2,500 crores each in both of them. And which means that they can sort of execute these orders since they are already sitting on an order book of nearly 10,000 odd crores. And data center is a very interesting opportunity which is coming up, and I think so. Why we feel that this company can deliver very high growth earnings of say 35% with a target price of again 1920. So again, one more company. So Cement is another segment which we have been liking. So Ramco is what we would suggest with a target price of 1180. Now again, cement had one of the worst years in 2024 calendar year. But a company like this, Ramco Cement, is expanding their capacity from say 24 million ton to say 30 million tons, which would mean that they can easily deliver a volume growth of about 8 odd percent. And we have already seen instances of incremental price hikes being taken. So EBITDA per ton ideally could improve from say 814 kind of a level to closer to 1000 kind of a level. And this stock is trading below the replacement cost. So replacement cost is somewhere about $120 per ton. So it is trading at 106. So which is why. And I think road is another segment where we haven't seen much of ordering and tendering, and KNR is one of the best in the business. So this is one company which does not take orders just for the sake of taking orders. So they were conscious of the margins, and which is why this is one of the few companies which is debt free. Our sense is that in the second half, a lot of order inflows could be there in the tune of 5 to 6,000 odd crores. They are already sitting an order book of 5,600 odd crores. On top of it, there could be development opportunities which could come in, say, Andhra and Telangana of about 20,000 odd crores. So as a result of this, the top line growth could be at about 10 odd percent. I already mentioned that the company is debt free, and which is why I feel that this company is another a company in the infra space which could do well with a target price of 390.
Absolutely. So you mentioned quite a few themes. We saw CDMO as well. We saw financialization, premiumization. So which other in these themes, which other stocks would you say are looking good?
I think within the premiumization, M&M holds or has been sort of doing very well. This is one of the best performing stock last year, and I think good part is that this is one company which is expected to sort of keep delivering mid-teen kind of a growth, especially in the SUV portfolio. And SUV is now a sort of a premium product. You have features like ADAS level 1, level 2 coming up. You have panoramic sunroof, alloy wheels. So I think this M&M has been a clear beneficiary of that. And good part also is that the tractor as a business, since monsoons have been good, so tractor as a business is also expected to deliver closer to double-digit kind of a growth in the second half. And this company is one of the most aggressive in terms of EV also. So they're doing a capex of overall capex of 27,000 odd crores. Of that, about 12,000 odd crores is exclusively for the EV portion. So they are really sort of there in almost all the happening segments in the auto, and which is why I feel that the stock will continue to do well with a target price of 3,600. Now, in premiumization, I would sort of, or in consumption, I would also peg hospitals also. So, which is where I would recommend Narayana with a target price of 1,600. Now, this is one hospital which is doing the biggest capex in the last 10 years. So they're doing a capex of 3,000 odd crores. Recent past numbers have been sort of muted largely because they have a facility in Cayman, which is a very profitable facility, and they are looking to put up a second hospital. So a realignment of operation, all of because of all that reason, the numbers were muted. And I think in the second half, you'll see this facility coming up or getting operationalized. So numbers will also start coming in. And this is one of the few ethical hospitals, I would say, and which is why we feel that this company should do well with a target price of 1,600. Now, the other thing is I talked about the equitization of savings. Now, in banking, if you look at what is clearly happening is that the corporate growth or corporate leg of the overall growth has come down, say, from 35 to 28 odd percent. And then on the retail side, home loan is the segment where you don't see a stress. Otherwise, unsecured segment is seeing a stress. So, but in within the BFSI space, AMCs are one segment which can deliver a good high teen kind of a growth without any balance sheet kind of a risk. And we have already recommended HDFC AMC and Nippon AMC earlier. So now I would want to recommend Aditya Birla AMC. So this is one AMC which has got a market share of about 6 odd percent, about 3,80,000 odd crore kind of AUM. So we would expect their earnings to sort of keep growing at 18 odd percent, and it's trading at attractive valuations of about 18 times. So that is another stock which I like. And last but not the least is I mentioned CRAMS now, or CRDMO. So there, Piramal Pharma is what we are liking with a target price of 320, especially because our sense is that even without the passing of the Biosecure Act, this company can deliver 13% kind of a growth in the CDMO business, which is their biggest business. and with a margin expansion to 25%. So this is another company which we like with a target price of 320. So all the stocks are pertaining to the themes which we have identified.
Absolutely. Well, this sounds absolutely fantastic. While we are talking about 2025, I think another big concern in people's minds is the volatility, the risks that have been there. So, anything for our viewers out there that in times of volatility, what should they do and how should they manage the risks in the market?
So one thing is what we have seen is that historically every year you will see the market has the tendency to correct say 10 to 15 odd percent. That is for the large caps, mid caps could correct even more, and small caps can easily correct 25 to 30 odd percent. And 2025 is not going to be very different. But hopefully it is going to be less volatile. So one of the ways to sort of manage this volatility is again, if your risk appetite is say only 10 to 15% kind of a decline is what you can sort of tolerate, then ideally you should be there in the large caps. And in case if your risk appetite is more, that is where ideally, or you can sort of position yourself in the mid cap and small cap space. And like we have seen, say last year also, large caps did about 10%, the mid caps and small caps did 25%. The other way to sort of mitigate this thing is again diversify across sectors, and so that is one of the other ways. And last but not the least is that before any big event, it is better to sort of sit light in terms of portfolio. So from that perspective, that is another way. But yes, I think volatility has to be used very constructively. I think a lot of people get scared when the market's correct. But possibly that is the best time to build your portfolio, or like what we are seeing at this point in time. The last 3 months, we've seen markets being quite brutal. The good part for 2025 is that we are starting on a very low expectation. Unlike 2024, when the expectation was that the government is going to come with a very strong mandate and all of it. And from that perspective, we are starting on a very low note or very low expectation. I think that is the biggest positive which we are carrying at this point in time sentimentally.
Absolutely. Well, that was fantastic. Thank you so much for your time again, Pankaj sir. I'm sure a lot of people will benefit from this. For our viewers, if you have any questions, you can put them down in the comments and we'll try to get back to you with the answers. Thank you so much again for sharing your expertise, sir.
Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.